All right, welcome back. We got our weekly stock market update, and it's been a busy week in the markets. And we'll look at some charts here in a moment, but we're going to go over some of the big headlines, as I'm sure most people are aware. The market is down. Nasdaq is down about 12%. S&P is down about 8 to 10%. So is the Dow. And this is not a company-specific sell-off. This is a macro-driven sell-off. You've got everything going down. Stocks, bonds, crypto, even the metals this week are going down. The main two drivers here are going to be oil, interest rates, and obviously the Middle East tensions. So we'll take a look at oil in a second, but it's sitting around $90 to $95 a barrel. So this is keeping sticky inflation expectations are raising up. This is making it harder for the Federal Reserve to cut interest rates. The Federal Reserve had a meeting this past weekend. They didn't cut rates, and the possibility of a rate cut is now up to over 40%. So that was kind of the red card that has come out of nowhere, is if inflation is stickier, the Fed can't not only not cut rates, but there's a potential for them to potentially raise the interest rates, which nobody has been talking about that for a long time. To me, this seems highly unlikely, because even if they were to raise interest rates, that's not going to get the price of oil down. The only way that the price of oil comes down is if the Middle East gets resolved and there is more supply that is put out there from the oil producers. So that's the number one wild card, and it's going back and forth every day. Things, the news change. So this is something that obviously we want to see how this goes. But the fact that some high quality names are selling off because of this, we know this will eventually get resolved. And when it does, these companies are still producing a lot of revenue at a high clip. So this could be a nice opportunity if we get a larger sell-off here. So as far as interest rates, we'll take a look at the chart, but the 10-year interest rate is around 4.6 to 4.7, and that's gone up quite a bit over the last couple of months. And in the short term, the market is oversold, so we could look to see a bounce here potentially in the market and some individual stocks, but this could be a bull trap before the next leg lower unless we get some resolution on oil or interest rates. So obviously those two go hand in hand. If oil and Middle East get resolved, interest rates and inflation expectations will come down and the market can begin to recover. But right now we are seeing a valuation reset, which to me is the huge opportunity here. So the S&P is trading around 20 times forward earnings, which is a very reasonable valuation for the S&P. And same thing with technology names and financials. They are at a relative low. The valuations are about where they were at the low of the tariff tantrum. So we're seeing these companies, they're improving their revenue, but they're getting cheaper, both the stock price and the valuation that we're paying. So to me, that is exactly what you want to see as an active investor, because you're able to buy better companies that are producing higher revenue at a lower cost. So that's great to see. What I've been doing over the last month or so, I've been nibbling on some Amazon and some PLTR on these big red days that we have, but I haven't been shoveling a ton of money into the market, but I'm getting cash ready to roll. So I've moved around some portfolios. I've been adding money into investment accounts. My clients have as well, and we're getting ready to buy if we do get a nice pullback here, which it looks like we could be at the cusp of getting. Okay, so let's go ahead and take a look at some of these charts. The first one here is oil, and this is a insane looking chart. We looked at this a few weeks ago, and we've been talking about oil. Once it broke out of this trend line, it was ready to roll, and it is just it's been parabolic. So to me, this looks like something that is not sustainable and will eventually come back down. The question is, when will that be? We've seen something like this back in 2022, huge oil spike. From similar levels, we bounced from the 60 level and shot up to 125, and it was just a slow bleed down, and that's where we've been for the last handful of years before we got this next spike. So that is what commodities do. The cure for high prices is higher prices. So even the oil producers don't want oil to be in these high levels for a long period of time, because it's going to hurt demand and they'll sell less barrels of oil. So they will produce more, and we'll get some resolution eventually in the Middle East. Could be a week, could be a year from now, but eventually the price of oil will come back down. We just don't know when that'll be. And interest rates, 10-year yield, was under 4% for just a flash, and then we shot right back up. So this is not exactly what you want to see. We want to see the interest rates come down and people be buying bonds and not selling bonds. So we're in a tricky spot here where the market believes inflation will be higher, so they don't want to hold bonds. They're demanding a higher interest rate to buy bonds, and that's not exactly what you want to see. And that doesn't help people buying houses and things like that. So we want to see this come back down once we get a better outlook on oil and inflation. Volatility. So this is another important chart to take a look at. We have just been in this slow grind up with a couple spikes here and there. When the VIX is in this green box, that is when you want to be buying stocks, in my opinion. This is when the market is in a panic mode, and obviously back here in 2025 with the tariff VIX spike, this was only rivaled with the pandemic spike, which was ginormous. So when you get these big spikes, these are when things are at bottom barrel prices. There's a lot of liquidations in the market, and that's when you want to be a heavy buyer in the stock market. So it does look like we have the potential to get a nice pump here on the volatility, which would be a dump on assets, and that is where the opportunity will arise. So you have to be prepared for those spikes because they don't last very long, and they're scary when they happen, and they're confusing. So you need to be ready, have your shopping list, and execute it when that time comes. I will release a shopping list video later on this week. We won't dive into a lot of stocks today, but let's take a quick look at the Nasdaq and the S&P 500. So Nasdaq here, we have been at this level last year in November, and we bounced from there. So if I take out my little magic paintbrush, it wouldn't surprise me if we got a little bit of a bounce before making our next move down and then eventually recovering out of that. We've had this box drawn out on the Nasdaq and the S&P 500 for a while. This is what we are hoping to see, because we've had a huge run up since the tariff resolution, the tariff tantrum drop, and then we had the recovery after that, and we've been consolidating here for months. The market was bound to move one way or another. It looks like this is the reason for the market to sell off before we can entice a new batch of buyers, and then we can make our way back up to new all-time highs from there. But we probably need a larger sell-off to entice people to come in and buy, and obviously resolution and all the things we've talked about. But the S&P is the same looking chart here. We've hit all-time highs, pulling back, probably due for a little bounce before we make our next leg down, and that same box would be right around in here, our previous all-time high that we hit before the tariff tantrum. So that is what we're looking at on the overall market. Like I said, metals are going down as well. Silver down. You've got gold down. You've got copper going down. So this is good. Even things like wheat are starting to pull back. Natural gas is pulling back. So this is good for inflation because we're seeing all the commodities pull back, which is good other than crude oil. So obviously we need this to start to look like the other commodities before we can get interest rates down, and then the market can settle itself out. So that is all I got for you guys in this video. We can take a quick look at the heat map for individual names, but it's bloody. If the market's down, the individual names that make the market are going to be down as well. Obviously, you've got oil that is doing well, the oil names, and they're doing really, really well because oil's up. But we will have a shopping list video, so stay tuned for that. And any other news that pops up this week, I will bring that to you. So everyone have a great rest of your weekend, and I will see you next week. Peace out.